Welcome back to the Action Alerts Options Weekly Roundup. We're going to look at the trading week ahead, and economic data is a little bit lighter than we saw this week, but we still have a lot on the calendar. The all-important JOLTS jobs data, and of course jobless claims on Thursday. For the consumer, we're taking a look at the Red Book, retail sales, and consumer sentiment, and we're going to wrap that up with manufacturing as we look at business inventories and PPI. And Mike, with that interest rate hike speculation so tentative around trading right now, those numbers really matter because as the economy gets better, that speculation date moves in a little bit more.
Yeah, I think that's true, although I would make sure that when people are focusing on the risk of a potential rate hike, there's two things that you need to incorporate. We could actually see fairly robust economic data in the United States, and the Fed might actually decide that they aren't going to proceed with a rate hike just because of that, because they actually are enthusiastic about the idea that they could bring the unemployment rate down exceptionally low and continue to fuel the economy as long as inflation remains in check. And they actually have an inflation target in place. We're looking at 2 to 3%. We're well below that. So inflation data is probably the most important thing for us to look at this point. If the economy is just humming along at even a modest and even good pace, that's okay. But if you start to see any kind of hints of inflation, that's when the Fed's likely to act.
The earnings calendar is winding down and it's relatively quiet. A couple names that we're going to look at is Hovnanian in the homing sector, and that's been such a bullish place to be this year. Hovnanian, though, is all the way at the bottom of the pack. Analysts in the market love Toll Brothers and KB Homes, but this is just a stock that can't get out of its way. It's just not performing at all.
Yeah, I think one of the things that investors are probably looking at is the fact that some of these names look actually very attractively priced at current levels. But I think people are pricing in the fact that when you buy a stock, you're actually buying all of its future earnings, and all of its future earnings are going to incorporate everything that's going to happen to rates within the next 5 to 7 years. And if we know that rates are going to go higher, and I think most of us accept that that's going to happen, maybe not sooner, but eventually, then it becomes a little bit harder because that is definitely going to put a lot of pressure on the home builders and even existing home sales, I suspect.
We're also going to take a look at Lululemon. We sold out of that in Action Alerts Plus just a couple of weeks ago, but this is very interesting because I like the trend here. The whole athleisure trend is so big right now, and I read an interesting article where an analyst in California was saying that Lulu is almost the gateway drug for that yoga trend. And while we just sold out of it, I still think if you look towards what the trend is saying for the future, that this is really the hot space right now. In fact, you're starting to see on casual Fridays where yoga wear is becoming acceptable in certain industries.
You know, I have something that I like to call the Holly Index. Holly is my wife, and one of the things I have observed is that if I take a look at my American Express bill and where she spends her money, I wish I had bought every one of those stocks. And Lulu is a place that she continues to spend a lot of money. Her friends do too. And to me, that's all I need to know. It's like looking at the line outside of Starbucks. You don't start selling Starbucks stock until you start seeing those lines begin to shorten. They're not shortening at Lulu. They're not shortening at Starbucks either, so I would probably stay along both those names.
Well, it's just like retail analysts. That's how they do their channel checks, looking at foot traffic and looking at receipts.
That's exactly right.
We will wrap it up and we will take a look at XONE. It is a 3D printing stock, and this is one of the entire group. While short interest was lower in most of the names, it continues to rise in this one. On May 11th, they announced that they were going to push out their earnings release, and it just hasn't been consistent. It's such a catch-22 here because you would think the space is so fascinating. It's set up for future growth, but these stocks have really had a tough time.
Yeah, I think a lot of people are still trying to figure out what the real opportunity is here. You know, when you start seeing that short interest rise like that, when fundamentally you see a lot of trouble, when you have management having a very hard time providing guidance to investors, that might say, okay, well, I think I ought to sell the stock, maybe even short it. But when you start seeing that short interest rise, that isn't something you want to do because that means the stock is setting up for enormous volatility. And we have seen this play out so many times before where short interest has shot up, everybody hates the stock, and then all of a sudden you get what's called a short squeeze, and that's a very painful place to be. Sometimes it's not even possible to borrow the shares even if you did want to short them. It also makes puts really expensive. So I find these to be really interesting stories, but I also say, you know, watch, don't touch.
The short interest on this is massive. It's at 39.6%. That is just something you don't want to be in front of, especially on an earnings print. And yeah, I would certainly stay away from it, but I just think it's interesting to watch because it's been such a fascinating sector, and this really could be an area for future growth. It's almost like when the iPads came out and every other sector was taking a piece of it. It just exploded in healthcare. And I think this could be, obviously down the line, another area like that.
Actually, I think the opportunity is going to be when this one blows off. So basically when you see this thing get washed out and investors take a step away from the space, whether it's the shorts or the people who are the speculative longs, that's the time to take a look at it and say, okay, now I'm going to put my toes in the water and give it a try.
All right, thanks very much, Mike. For The Street in New York, I'm Jill Malandrino.